I had been doing Airbnb since 2015. So I started flipping in 19, but I had been doing Airbnb since 2015 as just a room out of my house. And I never thought that that would be like, I just always thought like Airbnb was couch surfing, right? Like,
Yeah.
why would anyone want to rent an entire house for Airbnb? That's goofy. And when I bought my second house that I was going to flip, my mentor told me, hey, you should hold on to this one. And then I started doing the numbers and I'm like, okay, $600 of cash flow per month. Like that doesn't really get me excited. And then another mentor was like, you should look at Airbnb. I'm like, Airbnb in Fresno, California, that's where I live. I'm like, no one's gonna want to do Airbnb in Fresno, California. I started looking at the calendars on all the properties and they're like book solid and like have like $100 per night. And I'm doing the math and I'm like, if I get this even like 80% occupied, that's like $1,500 of cash flow. And in month one, I decided to go for it. So month one, that property actually did $2,000 of cash flow, and that's when I was just like, okay, I think I found something here. And I was really one of the first in my market. I was going to mentors of mine who had flipped, you know, 50 to 100 houses a year. And I was like, I think I'm going to do this. And they're like, I think you're crazy. You shouldn't do it. And I was like, I think I'm onto something here. And went out and bought two more houses, turned them into Airbnbs. And man, the rest is history. We ended up starting a management company that grew right during COVID to the tune of about 70 units at one point.
Wow. So, yeah, I wanted to ask you about the management company because
Yeah.
that's something that I think a lot of people think about after they start doing short-term rentals. It was something I was approached by several people saying, hey, I want to invest in short-term rentals. Can you manage mine for me? And it's something I
Mm-hmm.
considered. Ultimately, I decided that that wasn't the part of the business I was super passionate about. But I'm
Mm-hmm.
curious why you decided to grow a management company. And I guess what you learned from that experience.
Very simply, it was just a need in my market.
Okay.
I very quickly became the Airbnb guy. And so realtors that I was working with were sending me clients who were asking like, hey, what should I do to buy an Airbnb? What do the numbers look like? And I'd never heard of managing or co-hosting or any of the terms out there for this. I only knew about arbitrage and I knew about ownership. I think at the time I had one or two arbitrages and I owned three. And I kind of said like, okay, well, if there's a need, can I structure something around this need? A lot of people, I probably had three or four people at the time in a very short amount of time saying like, can you tell me how I could do this to where I could make some money? And I was like, well, maybe I could like turn that into a service. And then just 6 months later, I hear someone else mention co-hosting, and I'm like, yeah, I've been doing co-hosting for a while. I call it Airbnb management.
Yeah.
I didn't know that had a name. Um,
And can you explain the difference between arbitrage and co-hosting for people who aren't clear on that?
yeah, arbitrage, you're going to go and rent the house from someone and you're going to relist it on Airbnb with their permission and you keep the profit. So if it's $2,000 of rent, plus you have $500 of expenses, but you rent it out on Airbnb for $4,000, you just netted $1,500 and you don't own the property. You just have to furnish it. Um, the co-hosting model, I don't have a single dollar in the deal. In fact, I get paid to set up the property because the investor is trying to get a better return. They're going to hire me. They're going to buy the property. They're going to hire me. They're going to lean on me for all of the knowledge of how it should be furnished. I might even bring in my interior designer and have them do it. And I become the service to them that allows them to be completely passive in the whole thing. I'm going to charge a premium for that, 20 to 25%, but it's worth it for the investor because I've built that into their pro forma of how I think that property is going to do. And what was great for us when I first started the management company in Fresno, California, was that long-term rentals were really slow and low in terms of the rent. So there was about $1,000 gap on
Mm.
every single property that I was showing people that, hey, you could make $200 of cash flow, or you could turn it into an Airbnb and hire me and you'll make $1,200 of cash flow. And so that was the benefit to a lot of these people. And that's why, after we did our first co-hosting gig and the client was happy, it was just referral after referral after referral after that.
Wow. And you ultimately grew this to about 70 properties, and
Yeah.
then you scaled it back to around 50 and then ultimately sold the company. So what was the reasoning behind that?
The scaling back or the selling?
Yeah, I guess what did you learn from the process that, yeah, and the impetus behind deciding to scale it back, and then ultimately how'd you decide that it was time to sell?
Yeah, it's a great question. When you are doing something on your own, right? 5, 6, 7 properties, you don't have costs, you don't have overhead, you don't have employees, you don't have a bunch of software. As you grow, your hard costs become a lot more, right? I can't do that on my own. When I got to 15 properties, there was no way that I could handle all the guest communication. So I had to hire VAs. At really property number 3, I already had a vision of turning this thing into something big. So I had already hired basically an assistant. Well, that assistant eventually turned into my basically my CEO, the head of the company, to where I was pretty much hands off and I relied on her for most of the decision making. Um, then I had a cleaning manager. Then I had in-house basically like property checkers that would go and check on the quality of the properties. There were just a lot of costs that started to build up. And when you start looking at your cost per property, which is what I would essentially evaluate my properties at, well, if my cost per property was $400 and I had a little studio apartment that I was managing for someone else and I was making 20% on a $2,000 per month property, well, do the math there. I'm actually losing money by managing that thing because my cost per property is $400.
Mm.
So that was why we scaled down, was because we said, okay, there's actually properties in our portfolio that are losing us money and don't really make sense to be in the portfolio anymore. And then the sale of the business was just a life decision, because at that point I said I became a first time dad, and it was between my wife and I having conversations of just like, hey, what do we want life to look like? And we decided that, selling the business was going to be the best for our family.
Yeah. Yeah, no, that makes sense. And I think not a lot of people talk about getting intentional about the assets that you have. Everyone's talking about like buy more and build and, grow, grow, grow. And I think there's a point where it makes a lot of sense to cull the herd, take stock of where you are in terms of all the assets, which ones perform the best,
Yeah.
which ones are worth your time in the beginning. Like you said, like, you were willing to out hustle anyone, and, just whatever is going to make money, you got to do. But
Yep.
then as you grow, you got to be more intentional about it. And I'm kind of in the process of looking at that now. We have 33 short-term rentals. We're adding more currently, and it's so hard for me to sell because I sold all my long-term rentals in 18, 19, 20, and then I watched 21, 22, 23, like massive appreciation. And I was
Right.
like,
Right.
so it's so difficult to sell because they're going to go up in value over time. But at the same time, time is really important. So
Well, and just to clarify, I didn't sell any of my real estate. I just sold the management company.
yeah,
So,
got it.
and I'm a big believer. If you want to build true financial freedom, you should always be looking at doing something active that either feeds your soul, feeds your bank account, or has an opportunity for you to be able to put more towards the passive income,
Mm,
right? I think a lot of people, they start a flipping business was one example we use, right? And then before they know it, they're 5 years in, they're doing 50 flips a year and they've got no time. Um, they look back and they say, well, what if I would have kept just 5 of those flips per year? And I would have 25 rentals right now, and then I'd be able to live off my rentals, right?
mm-hmm.
And that was something that, like, everyone's in a different stage of their life,
Yep.
right? If you
Yep.
only have $1,000 in the bank account, you're gonna need to flip properties. You need to get more money in the bank account. But if you've got some savings set aside, now it just becomes a part of like, all right, what do I want life to look like in 5, 10, 15 years from now? And how do we make moves today to start getting to where we want to go? And I say all this to say, like, you can build a business in short-term rentals, an active side and a passive side separately, which is what I did. I built a active management
Mm,
business where I owned contracts from people who own the properties, and I was able to sell that at a 3x uh, denominator, whatever word you want to use there, of based on the net value of the business.
So the
That was
3x of the annual income or the
of the
annual net
annual
profit.
net after
Got it.
expenses,
Okay.
which was wonderful. It
Yeah.
was a huge blessing, and I did it in a way that was good for our family, which was just basically, hey, we're going to sell part of this on a note, so we still have some income coming in from this for the next 5 to 6 years, so that we don't have all the money in the bank account and then one day it's gone. So
And from a tax perspective, that's even better too.
exactly,
Yeah.
exactly. So then I said, okay, well, that meets our expectations as a family right now for the lifestyle we want to live: family time, travel, pursuing passion projects, having choices, right? Like that's what financial freedom to me is just having choices. But I know that there's this thing called inflation, and I know that life changes, and I know that some things happen. And so what we're doing now is we're just saying, if we can add 2 to 3 rentals per year to our portfolio, which is what we did this last year, we added 3 to our portfolio. We can keep up with the inflation. We can keep up with all of this. And then one day we can say, hey, kids going to college, let's sell one of the rentals, or let's refinance one of the rentals and let's pay for college. Hey, a life thing happens. Oh, we got 100K of equity here. Let's go get a HELOC for that, or let's sell the property. And so you have all of these assets now that continue to allow you to live off them, but also just in case of emergencies, you've got these basically like little bank accounts all over the place that you can pull from.
Yeah. Yeah, absolutely. No, there's so much that overlaps in terms of our stories because very similarly, we did 4 projects this past year. And we're the same way. As long as we keep a few going at a time, and it continues to just build the overall net worth and cash flow, but yet there's enough income from them that it is enough to pay us and live a very nice lifestyle. So I think there's a lot of wisdom in that. I'm curious how you finance the properties at this point, because a lot of people who don't have a W-2 job or don't have a W-2 job enough to support conventional financing
Yeah.
Run into this obstacle around financing. So what is the strategy that you employ?
Yeah. Very simply, it's creative finance. So, and now I still do, and I don't know how much your viewers know about, like the Burr method and other things like that. We still do those types of things, but creative finance is really where it's at now. And the funny story of this is one of my first students that I ever taught how to do Airbnb arbitrage turn around after 6 months of building up 50 units, 50 in 6 months
Wow.
through arbitrage. He turned around 6 months later, called me and said, hey, I just bought 30 houses with creative finance. And I said, you did what?
After he built up 50 in arbitrage?
Exactly. Yeah.
Did he age 10 years during that time period?
You'd have to ask him that, but he's he's just a beast. I mean,
Yeah.
like the guy is an absolute beast.
Yeah, it's hardcore.
And so I asked him, like, dude, like, what did you do? And he told me about creative finance. And I was like, oh yeah, Pace. I know Pace Morby. Like he's doing that, but I just never really truly looked into it. And to your point, if you don't have the credit, if you don't have the income, and if you just hate the rates today, there's ways around it. You don't have to use a bank. You don't have to be told what rate you're going to have on that house. You can create the terms. You can create the deal. And that's what my then student, now teacher, you could say, tells me all the time. He said, good deals are not found, they are created. And that's what's great about creative finance, is that I can go to you, Kirby, who's had your house on the market for 90 days, who's frustrated that it's not selling, and you don't want to budge on price. And I can say to you, hey, if you're willing to sell this property to me on terms, I'd be willing to give you not only the price that you're asking for, I might even be able to give you over asking. Would you be open to that? Right. And that's the beauty of creative finance, is that I can take whatever that property is worth to you and find a way to be able to match that, maybe even succeed it, and say, screw the banks, we're keeping them out of this, but I'm going to still help you earn interest. I'm going to make you the bank. Or if you already own a house with a mortgage and you're worried about paying your mortgage to that bank, then I'll just take over those payments for you, and I'll give you a nice down payment.
Can you explain how you can make that work as an investor because everyone's so fixated on price. And
Right.
so I think the thought of paying above what others are willing to pay, if it's been
Yeah.
sitting on the market 90 days, obviously a lot of investors have looked at it, they passed by it, but you're willing to pay what they're asking or potentially above that. Why does that make sense? Can you break that down?
I'll give you a deal that I just did recently in Indiana.
That's where I'm at, by
House
the
was
way.
on the market. What's that?
That's where I live, by the way.
Oh, nice.
Yeah.
What city?
Valparaiso.
Oh, okay, cool. Not far from South Bend. That's where we're
Yeah.
investing right now.
Yeah,
Yeah,
exactly.
yeah. I'll send you my Airbnb in South Bend. We call it the
Cool.
Leprechaun Lounge. It's 4,800 square feet. It's got an Irish bar downstairs. It's amazing.
Nice. Stocked with Guinness.
Oh yeah. Well, we don't leave the beer in there, but if someone wants to bring it, they can.
Nice.
But right down the street from this property is another one that was a 3-bedroom, 2-bath in an up and coming area. We did the research. We knew that there was a Trader Joe's that was opening up across the street. We knew that there were a few other things that were going on. It's only a mile away from campus, and that this property would do nothing but appreciate over the next couple of years because of the things that they're building around it. It had been listed on the market for 1 year, and no one had taken it. It had been in and out of escrow a couple times. Listed at $369. The current owner had basically one note left on it. It was a HELOC for $40,000, and that HELOC every month was costing them about $600 a month. So we said, hey, we'll take this property off of your hands. You'll still own that HELOC, but we'll pay you every single month so that you can pay that HELOC off, or we'll take over that for you. We kind of negotiated that. Either way, the payments are being taken care of is the important part. And they agreed to give it to us at a 4% interest only for the first 2 years, and then 4% plus principal the following 2 years. That payment comes out to, for a $355,000 purchase price, we ended up agreeing at $355,000. That payment comes out to $1,100 per month for the first 2 years.
Nice.
We get 1 weekend booked, and we have paid for our mortgage.
Yeah, yeah.
Now, if I were to go buy that property for $355,000 through a bank at 7%, my mortgage is going to be somewhere north of $2,000, maybe even pushing $2,500. And honestly, that wouldn't have been worth it for me at this property. The average income that we expect to make this property around is about $50,000 for the year. So if I'm paying half of that to my mortgage and then a quarter of that to my other expenses, then I'm kind of like, well, I have a little bit left over. Well, by doing it this way, with interest only $1,100, I am going to be netting somewhere in the neighborhood of $25,000 on this property by the end of the year. And that's the beauty of being able to do this. We worked straight with the realtor who worked with the seller. We were able to do all the terms right there on a Zoom call together. I'm in California, they're in Indiana, and we were able to just get them what they needed. They just needed, and that's the key thing here, is that it's not about purchase price. It's not about the rate. It's about solving a problem for that seller. And their problem was they didn't have a renter. They were eating $600 a month, and they didn't want to put in the money to fix up the property. So we said, we'll fix up the property, we'll own it, and we'll give you the cash flow to not only pay for your mortgage, but you'll make some cash flow. And then after 4 years, we'll go ahead and refinance you out of the property, and they'll get their full payment.